General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
All right. Okay. Friday was the 24th. Let's go here first. The anchor point here. We can say the anchor point was confirmed, being that this was the last expansion down. Key level with SMT, 8:30 at a key SMT time. Delivered to objective. Under Monday's low, Wednesday midweek reversal with the confirmation. This is the model. On a week 4 with the CPI Friday. Yes, it was on Wednesday and confirmed on Thursday. Yes. Yes. I think the less important part of Friday is the delivery. I think this is the important part because Friday nobody wanted to trade because of CPI. Old all-time high at London is kind of important. So this gave us opportunity. It's not classic because we left Asia open, so we would have been looking for sales all day, no matter what. Regular trading hour gap, not really, because of CPI. Yeah, that deletes that. Just upside. It probably is some people like I don't care if it's CPI. I want to take Asia low, which is understandable, as long as you don't blow your account trying to do it. like 2, 3 shots, 3 strikes, you're out. Okay, so the main thing from Friday delivery is London. Take note how we used all-time high. Retested Asia high. That's a breakout sign right there. We're not mitigating. Pushed up. That's actually a clean setup. The only thing would have been the fear of gap risk on CPI surprise. So is it? Yeah. Gap risk on CPI surprise. So it would actually be better traded on the option side, where risk is defined. Even if you have a stop loss, it can gap your stop loss. So +1 for the options frame of mind. Boom. This. It's just way too clean. I thought it was going to be a Torah week. The only day that was little was Tuesday. Large range Monday, small range Tuesday, Wednesday midweek reversal, Thursday retest, Friday complete the delivery. This is picture perfect model week, and it came at such an odd time, which tells me no matter the news cycle, show up for work. You know, the Fibs is doing what they supposed to do. Where's my uncharted territory? Because I need it. I think I put I know I put the code, the link, and all that stuff is in the Telegram. Or if you're on my Trading View, you can just, it's a public script. This is stupid high. I need some regular levels. I do like this. The 618. It's logical. 12. What is this? because I think the front part 52. This is H1 1.618. And it is the dotted. Yeah, way higher. And then just way higher. So I need a pivot here. Not a pivot, but I need a lower low because this will be a swing high. And then I can use this to get swings and fibs and stuff so I can have targets because I don't like not having no target. Let's see what the OTE is saying. Here. Hold up. This is 25, 462.78. And this is the zero minus minus 0.27. Okay. This is 796.51 minus. And then right here. 26, that's 162. Okay. Hold on, I need to copy it. This is the ugly green. Bam. Alright, because this was the last little retracement we had, 50% pushed up. We haven't even hit the first target yet, so we got more to go here. Maybe a retracement here and then here. Let me remove this. Let me hit this off because we have price here now. Yes, remove them. That was smart of me to lock those drawings too. Let me lock these. Let me put the daily. That's the daily. This is OTE. Then lock. Daily OTE. Then lock that one. I'd be liking to know which projection it is too. So I'm gonna put the OTE, and I already know what I do for the uncharted territory fibs. Lock this one. All right, so we got our first levels, our old levels. This is just Friday. Getting used to trading out all the time, huh? Growth mindset. Let's go. See what silver did. I was looking for it to go down. CPI, man, it tricked everybody. I was not interested. I, I looked and seen it was just janky. Look at this. This is CPI, and then this is what it did. Nothing. See, nothing burger. Can't even over-explain a nothing burger. And I like to over-explain the price to try to remember. This is interesting. We didn't take this low. Like this low is interesting. We had a failed expansion. We should run this low. But let's just say this showed up. Let's make it green because it's bullish. The other one's supposed to be green then, technically. This is actually a pretty good reaction. But this wick, okay, so this is the candle that closed here. So we wicked here, retracement complete. We really don't even have to. So the CSD is here with the wick, and then we pushed up. We didn't have to come back down. That means our line in the sand should be here if I was scalping. I should want to see higher prices if I was bullish. Overall, this looks like engineered liquidity because this reaction is not that tight. And we got unfinished business right here. That's what ICT call it unfinished business. Let me actually make something for it. We just engineered the liquidity for it. Let me just double check that we didn't tap it. Nope, we didn't. I got so many templates. Okay, so that's what's going on silver. Retracement still makes sense, but we can still get lower because it's just too much of that unfinished business down there. CPI, I mean, this looks like a retracement to seek internal range or internal range liquidity to go lower because we still have a lot of unfinished business to take care of. Okay. Mm, here. And then we took this low. It's an interesting sequence. Took the high. And then this took this low. And that's it. This is definitely engineering liquidity. Like we can retake this up candle high with another up candle and actually put a candle body here just to create an order block. Where's 50%? Because 50% of the range is where order blocks get created. Premium discount. So let me do this is actually better idea. Hold up, because I think I got a fib here. I do. It's a great target. I need that. I was finna do another fib to say order blocks created. Yeah, I think I still should do that. Maybe do it differently. So first, let's do this. And let's do cool color. Take off this. Hold on. Take off this. I wish I could take off the parentheses. Then don't extend lines. Now extend it. Where's the line? Okay. Take this off. All right, let's do this one. Okay, that's cleaner. Now, lock this. All right, so we got us ideas. We can look for buys. Buys make sense since this is activated. If like a Tuesday low or something, maybe we run this and then come here to end up coming to this. This is still our bank level. Okay, yeah, it's a good level. And this is giving me bearish projections. Oh no, it's not. They bullish. They just so high up, it looks bearish. Get a good size picture. Give retracement ideas to go lower. Not bearish per se, but I want to take out the original consolidation. I've been watching the 1 hour chart. The EU. Okay. So Monday's low ended up getting tagged. I think that's what we wanted, yeah. So we got the targets on NASDAQ and EU, but not silver. Yeah, silver didn't do anything. This actually had a decent sized pump and it don't look tradable at all. It looks atrocious. I still got to get a better adjective. I've been using atrocious for a minute. Okay, delivery ugly, but objective reach. It's not pushing up with force, which makes me think we still got lower to go. Hold up, just make sure I didn't miss. All right, cool. Objective reach is not. Makes me think. Okay, boom. I mean, it don't really look bad, huh? Start the new week, push Tuesday. Sometimes, like, it just look bad, but it's probably tradable. Because think about NASDAQ, how NASDAQ be looking. Do it really be looking that much better? Nah. It's about the same. Same level of tacky, same level of government shutdown, bread and butter, in and out. It came back to my entry again. You can see it. I can see it. Sure. Just not feeling the EU chart. Right now, you would be more interested if we do run the lows and reaccumulate loans. I would actually look for sales. If the opportunity, if the setup shows itself. I ain't feel like spelling present. Sometimes you just don't feel like spelling that word. Can't wait till we get back to these days. These are good days. That's panicking. So the gap is filled. It's not being respected. I know it's locked. Unlock it. And there was a gap here. Filled. This open price. Respect it. I still say it needs to go lower just because it's not really pushing. We had CPI. You had a chance. You didn't even take this high. Do we have to? Mm-mm. We can sell. We had liquidity here. But I don't think it needs to go up there. Not right now. Equal lows here. Let's take here. From here to here is worth it. Even if we chop all the way in here, it's worth it. You can put on risk and cover swap and holding and carryover fees. Just from here to here, this 15 to 17. No respect of the up close candle. PBL to PBH. So I'm going to wait for it. There was no TGIF. Yeah. CPI, government shutdown. What would need to be trigger gauge? No CPI. Maybe a clean rejection of a level with 2022 model. What did price deliver the ads? did a good job recognizing choppy conditions. Next, for a similar day, position on the option side, be in position on the option side on obvious moves. Framework, yeah. What did I learn? Yeah. Take it easy and rest in the model and don't force it like it has to happen. Don't force it like it has to happen. Look at how this week gave one shot, one kill. There is no. I'm gonna have to do this every Friday. Let's take that off. Hold on, maybe I can get this to do it. This might mess it up though. Yeah, I don't think she got no customer service, so no. Undo everything it just did. That's it for the Friday recording.